And it's a great example for the rest of the Middle East, in fact, for the rest of the world. You know, a small desert kingdom has become a center of international tourism, international trade, just quite remarkable.
Thank you very much, Ruler. And you know, there've been a few changes around here. I see. I came here in 1992, and there were two tall buildings. There was the Hilton and the hotel and the golf club. And I remember that none of the taxis had any meters, and it was 5 dirhams on one side of the creek and 10 dirhams to cross the creek. And that was what one of the veterans here told me was the most important thing. So we've seen a few changes since then, and it's a great pleasure, ladies and gentlemen, to be able to have a chat with a veteran emerging markets investor known as much for his sartorial elegance as his pioneering forays into undiscovered territories. He ran the asset class emerging markets at Franklin Templeton for 30 years, where he became chairman of the Emerging Markets Group, eventually overseeing $40 billion in investments. He's recently set up his own investment shop, Mobius Capital Partners, as Ruler mentioned, and something that a lot of people don't know. But I remember in the 70s, investing in the developing countries was just known as investing in the third world. That was the disparaging term that was always used. And Mark and his colleagues at MIT in the US, they thought, we need to rebrand this. We need to make this a bit more acceptable, a bit more friendly, a bit more respectful to the people who live in these countries. And they came up with the term emerging markets, which all of us just use as a daily phrase these days. So this is the man we have to credit this phrase to Dr. Mark Mobius. Dr. Mobius, when we first met 25 years ago in Hong Kong, the Hang Seng Index of the Hong Kong listed companies stood at less than 5,000. Today it's closer to 30,000. Even then, many locals said, oh, this is overcooked. Economists of some large institutions were telling me not to trust that flash salesman on TV in his white suits. But I remember you said to me, look outside, look at all the building that's going on. Look at those laborers clambering up the bamboo scaffolding. Look across the border at China, where Shenzhen is moving from fishing village to small city, now one of the world's fastest growing high-tech cities. And you told me this is where Europeans need to be investing. This is where you are putting your own money, and you said this is the beginning of the story. Can you see any investment story today with a similar dynamic to what you saw in that corner of Southeast Asia in the early 1990s?
Right here in Dubai, you can see that happening because you have a government which is bent on increasing investments, in growing the economy, in opening up, and it's a great example for the rest of the Middle East, in fact, for the rest of the world, of how a small desert kingdom has become a center of international tourism, international trade, and all kinds of investments. It's quite remarkable.
But, Mark, not all of those buildings we see springing up, they haven't necessarily all got people in them. And this could be a problem. Do you think there's too much building going on? And you know, we've seen the Abraj collapse in the DIFC, one of the largest companies in the center. Do you see concerns that maybe it's all moving a bit too quickly here?
See, in any growth situation, you're going to get ups and downs. You're going to get overbuilding, overfinancing, then you have a correction, then you start the cycle all over again. But the important thing to remember is that these cycles, the peaks get higher and higher because you're building a larger and larger base. And that, I think, is what's happening. I mean, I know from my experience, because I own apartments here, rents have gone down. But it doesn't concern me because I know that going forward, the overbuilding will stop. There'll be filling up of these apartments, and we'll start the cycle all over again. So I don't think we have to be too worried about it, because you can't really prevent that. When people are optimistic, they invest, and then they overinvest. They overdo it. So it's part of the cycle.
And please feel free to tap away any questions in the Slido app, anything you want to put to Dr. Mobius. But I mean, you're talking about, you're positive about this region, Mark. If Hong Kong was the gateway to China in 1993, is Dubai similarly the gateway to investing in Africa and the MENA region today?
Not yet. It hasn't been developed enough, I believe. I think going forward, Dubai certainly can play that role. There's certainly a need for this. And interesting, if you consider Brexit and the role of London in the emerging and frontier markets, you know, one of the reasons why we established our office in London is because that's sort of the center of emerging and frontier markets in Europe. A lot of companies in Africa, in Latin America, and so forth have their listings in London. Now, the degree to which Brexit begins to have a dampening effect on London may mean an opportunity for Dubai to take the place, to create a market for these companies here in Dubai. But that has to be pursued very aggressively. You've got to really go after that and say, look, you go to Nigeria, go to South Africa, go to Kenya, Ivory Coast, any of these countries, we want to have listings here, and let's promote that sort of thing. It could be very, very good.
But you've been trying to convince the world's investors to back Africa since 2014. In fact, when you were with Franklin Templeton, and I remember the rival groups, they were blaming you for bidding up the prices of stocks in Africa. Does the route have to be through private equity because there's a lack of quoted stock opportunities?
Well, that's why we started a private equity division within the Emerging Markets Group in Franklin Templeton, because we found that there were so many opportunities, but not enough companies were listed to begin with. And if they were listed, they weren't really having any kinds of liquidity. So what we said is, okay, let's go after the companies that are listed, but are not really turning over. There's no real behavior, no real action. And those companies that are ready to be listed, they can become listed. So that's what we focused on. That worked out pretty well. We were able to get into a number of good companies and bring them into the market, so to speak. Or if they were already listed, give them greater recognition.
And China was quite instrumental in that transformation of Africa through investments. Do you feel that China will now play a crucial role in saving Europe from long-term decline through the One Belt, One Road strategy of building the connecting infrastructure?
I'm afraid that it will help, but Europe has to help themselves. And that means that they've got to find a way to accept more immigrants. This may seem strange when we all are thinking about walls and restrictions, but I think Europe has got to move towards a system of accepting more and more immigrants from anywhere, from Africa, from Middle East, wherever, or Latin America and so forth. And then growing on that basis, because the demographics for Europe are against them for now. And you can see that in the growth rate. It's very, very low. Eastern Europe helps to some degree, but even in Eastern Europe, you're getting an aging population. So they've got to really think about how to introduce a new segment of the population that are younger, hardworking, and willing to adjust to the European community ideas.
And does that go for Dubai as well? For Dubai to be a true economic miracle, do you think Dubai needs to open up more to have less restrictions on residency here?
We'd like to see that. We'd like to see the government here lengthening the permanent residency period so that people can come here, bring their families, and consider it their home. This is very, very important going forward. But of course, the problem and the challenge is to enable these people and help them adjust to the local society and to the local mores and beliefs. And this is going to be a very, very important thing going forward.
It's very interesting to see the visitors here and to hear all the different languages. And I was having breakfast in the hotel just next door here this morning, and one of the attendants said to me, "And you can have a Russian breakfast." So I went to have a look at this, and there were vareniki and sirniki, which are actually Ukrainian dishes that are labeled as Russian dishes. So I was mentioning that to the staff. But when we look at investing in Russia, we've seen the authorities there, and I mean, it's not just Russia, it's these arrests we see in developing countries. We saw Michael Calvi, a key Western investor from Bering Vostok Capital Partners. The Kremlin's in a dispute with minority shareholders in a company he purchased. Is this a signal to foreign investors that they should withdraw from a country, or is this just typical behavior of authorities in developing countries as different clans are vying for influence?
You're going to have that in almost, well, every country. Yeah, look at the U.S., you have the same problems. Various government organizations make decisions which are not really very fair in one direction or another. So what we do is, okay, we look at the macro situation, and the two main questions are, number one, can we get the money out when we want? Foreign exchange control. Number two, is the government going to take over our business? These are the two questions we have to ask. So when Chavez came into Venezuela, we were invested in the largest electric company in Venezuela, Electricidad de Caracas. And Chavez comes in and says, I'm going to take over. And I told my people, let's get out. It's time to get out. And knock on wood, it's good that was the right decision. So I think those are the two questions. After you've answered these questions, then you have to begin to look at individual companies. So for example, let's take Russia. They're state-owned enterprises and they're private enterprises. Some of the private enterprises are fantastic. I happen to sit on the board of Lukoil, the oil company. Wonderful company, private company, no government control, and very, very well run. So you're going to find these pockets of opportunity in almost every country around the world. But you've got to look very, very carefully and look at the managements very carefully.
And so in terms of these lawsuits, I mean, you've had hundreds of these, probably thousands in your time as an activist investor. I mean, they must be quite draining. Were there any that almost kind of tipped you over the edge when you thought, it's that family again? You know,
well,
they just won't leave me alone.
That was mainly in Romania, because we had the mandate to run this Fondul Proprietatea, which was designed to compensate people who lost their property during the communist period. And they were all given tokens, and we had 20% of every state-owned enterprise. And of course, a lot of these enterprises were being raped, basically, by the people who control them. So we had to bring these people to court. And you know, a lot of people may criticize the European Union, but thank God Romania is part of the European Union. Because when we went to court, judges, of course, didn't know anything about commercial law because they had come from a communist environment. But they were learning fast, and they were looking over their shoulder to Brussels. They were going to make sure that they didn't violate the European Union rules, which really helped us a lot. So I think that's why, you know, the rule of law is a very critical factor when you're making investments.
But I mean, is there a slight change in your approach now? Because your new fund is based on companies that will improve their environmental, corporate and governance scores, particularly in developing countries. But you're outsourcing research now to specialist providers in India and making the investment decisions in London. I mean, this is a marked departure to your previous philosophy of kicking the tires, visiting all the companies yourself. Why this radical change in direction?
Well, actually, we still do that. In other words, our principle is based on two pillars. One, are the fundamentals good? I mean, is the company got a solid balance sheet? Do they have good growth prospects? That's number one. Number two, it's not so much the environmental and social, but it's the governance, the G. That's what we're after. And we must visit every company in which we invest. The reason is that we've got to sit down with the management and the people that control the company and ask them, look, are you willing to engage with us to make changes in your governance? We notice, for example, that you don't have an independent director on your board. Would you be willing to work with us to get an independent director? We notice that you don't have a investor relations person. Would you willing to help us to suggest someone? So when the answer is yes, that's when we invest. So we got to have these two elements. And a good example of this is many years ago we were invested in Turkish Airlines. And we went to the, this is when Erdogan first came into power. We went to the president and said, look, we noticed you don't have an independent director on the board. It was still government control, but listed. And would you mind if we recommended an independent director? He said, yes, I'm not against it, but you have to go to Ankara to talk to the minister. So we flew up to Ankara, and you could see the minister obviously did not have much experience in government. And we asked him in a very humble way, sir, would you be willing to allow us to have an independent director? And he said, of course, why one? Why not two? It was an incredible revelation to us. So we recommended two independent directors, and you could see the improvements right away because these were people with experience and very good. The other thing is that we noticed the food on Turkish Airlines was not very good. Food and service. So we said, look, we know a guy in Austria, in Vienna, who runs a wonderful restaurant. And we'd like to recommend him to do your catering. And by the way, this gentleman is Turkish. So we recommended this gentleman. They got along famously. They were able to speak in Turkish to each other. And they hired this guy. And now if you go to Turkish Airlines, you'll find the food is terrific because they've improved it. And of course, the airline has boomed. So this is an example of the kind of thing you can do to help a company improve.
But later after that, the Turkish authorities, I think at one stage, they describe you as a foreign agent trying to manipulate the markets for your own gain. I mean, do you still have enough faith in the entrepreneurial abilities of business people in that country to eclipse the rulers' maybe slightly totalitarian tendencies?
Actually, that incident was not the government, but it was a newspaper who said, oh, this Mobius is manipulating the market. He is making a lot of money by pushing the price up and down and so forth and so on. And they gave some examples of what they thought we were doing. Of course, this shocked us. We had never done anything like this. So we did then the government had to get involved because it was such a big item in the newspapers. So we did a complete examination of all the trades we had done. The government got all the records. And after about 4 or 5 months, the government said, we have found no error, no problem with what you've done. And then we said, okay, could you please publicize that? I said, no, it's not important. So this is a problem, because we still had that thing hanging over our heads.
Do I have a quick question from the audience before we wrap up? Anybody been thinking about any investment conundrums they might have for their institution or fund? Because Dr. Mobius might just have the prescription to help you solve them. None yet. Oh yes, there's a gentleman on the second row there. The microphone should just be.
Any favorite markets today? We have a lot of favorites because we're invested in Korea, in Taiwan, in China. India, of course, is at the top of our list. We think India has got great prospects, and we think there are going to be a lot of opportunities in India. But of the smaller markets, I would say Vietnam is the most exciting. Of course, with Vietnam, liquidity is an issue, but it's getting better. But most importantly, the Vietnamese government is moving rapidly towards privatization of state-owned enterprises. You must remember that, the transition that we've seen in all these years has been a move from a communist, socialist era, dictatorship era, to a market-oriented era. And this is to a great degree as a result of the multilateral institutions like the World Bank, the IFC, etc. They've gone to these countries and said, look, you want loans from us, you've got to privatize. You've got to create a market economy. And this is why we went, in 1987, we started with 6 markets, only 6 markets in which we could invest globally, to 70 markets around the world. So this is what's now happening in Vietnam. The process, by the way, continues. We're still not there. There's a lot more to be done. But in Vietnam, they're doing this quite well. And this is probably a very good opportunity.
I've got a few questions that have come in on the Slido app, mainly anonymous. Should the GCC states ditch the dollar peg and switch to a currency basket?
I think we're better off with a dollar peg at this stage because globally the dollar is still king. I'm not saying it's going to be that way forever. We've seen over the millennium currencies come and go. The pound sterling used to be the be-all and end-all of currencies, but it declined. And it will happen to the US dollar. But at this stage, I think we're better off sticking to that peg because people love to see a steady peg against the US dollar because the risks then are very clearly defined. You can make a bet on the US dollar and you know you're going to be safe in the GCC or any other country that is pegging to the US dollar. So I would say you're better off to keep the dollar peg.
And there's a question here about India. How do you perceive India's medium-term outlook and its impact on the UAE as being a trade and logistics hub?
As you know, Modi has been under attack to some degree in India, and in recent elections he's lost some states. But I believe that he still will be the most popular politician in India. And even though in the next election he may have to have a coalition government, he still will be able to push through a lot of the reforms. He's done a heck of a lot, given the difficulties up to now. And I think he'll be able to continue that going forward, which is why I think the Indian political situation is pretty good. Going forward, I think a lot of the reforms, such as the tax reform, is really going to have a big impact going forward.
And the final question, somebody's asked about what are the key risks for entrepreneurs who want to invest in emerging markets? And I remember you once told me the biggest risk that you saw was developing countries returning back to a central control, to socialist principles, to protectionism. Is that still the main thing that keeps you awake at night?
Yeah, I think that's the main thing. Governments abandoning the market-oriented economy. As I pointed out, there's still many governments around the world that have to move into that direction. Hopefully, Singapore, Dubai, and countries like that are setting an example of what a country can do if you have a relatively clean government, no corruption, and if you have a government that's intent on improving the lot of the widest group of population, then you're really going to do very well. And there are more and more countries that are beginning to learn that lesson. The good news is that with over 1 billion smartphones being sold around the world, 70% in emerging countries, people are learning more and more about what's happening in their own country and are going to be able to express themselves better.
And finally, just a quick word. I mean, you've outsourced a lot of your investment research. Do you outsource the pressing of these immaculate suits, or do you are you too worried that the iron goes astray? Somebody might brand one of them. Do you trust anybody with them, or do you
So I'm
tend to them
hoping
yourself?
that more people that attend these conferences can dress in purple, orange, green, white, yellow. Come on, let's get some nice color here. What I love about the Middle East is that you have the traditional dress in white, so I don't feel so out of place. You know, I feel in pretty good shape.
Excellent. So we want a diversified, multicolored approach
Exactly.
to investment. Ladies and gentlemen, please put your hands together for our special guest, Dr. Mobius.
Thank you very much. Thank you.